Home credit and motor leasing company S U Plc has just reported record earnings and its shares have just hit a record high. We're talking now to the chairman of the company of S U Plc, Anthony Coombs. Welcome.
Hi,
how have you managed this? I mean, this is startling given the economic backdrop, but how have you moulded your business into this phenomenal shape?
Well, I mean, it's hard work, it's attention to detail, and most important of all, it's good relationships with our customers. We have very close relationships with our customers. They stay with us, particularly on the home credit side. Many have been with us for years and years and years. And the fulcrum for that is the representative. I mean, the representative sees the customer every week. They can flex our loans compared to the circumstances of our individual customers, and as a result, a very close bond grows up.
But that very operational existence, if you like, has a very high cost base.
It does, but we don't add anything for admin charges. We don't add anything for late payment. There's no interest for late payment. So the great thing about our product is that it's simple and it's transparent. I mean, the customer will pay what they agree to pay at the beginning, irrespective of how long they take to repay the loan. Most of them repay on time because they get on with the representative and the representative understands their circumstances, but some don't. We flex for them.
So these are generally short-term. What do you call a short-term
Well,
loan?
the short-term loan for us is anything between 23 weeks and 68 weeks. Our average loan is probably about 40 weeks.
Is your business doing well because there's an economic downturn? Is there any correlation between the economic performance and your business, or is it? Do they not equal each other?
They say that in difficult times we do well. That actually isn't quite the case. We obviously like to have our customers to have plenty of money in their pocket so that they can borrow from us and they can repay comfortably. But the good thing about our loans is that they are convenient and that we will lend to people so long as we know them who may have had difficulty repaying before in a responsible way, so long as we know that they've got that freedom within their budgets to do it. But because we've been with them for a long time, we understand their circumstances. We understand what happens in their families. People leave home, divorces happen, partnerships break up, people lose their jobs, people go on short time. And we can flex for that. And as a result, we find that they borrow from us, even when they aren't able to borrow from elsewhere.
Just want to quote a broker note from you. Canaccord Genuity has cut its recommendation for the stock on valuation grounds after your shares rose, 23%, I think it is, since December 2010. Trading on 10.9 times broker estimates for this year and yields of 5.3%. Now, they say, Canaccord says that there's clearly a tailwind that you can benefit from in the months ahead. But what then?
Well, we think we've got a good business model. We think that we're growing our customer base. In both businesses, particularly in motor finance, but also in the home credit side. We think that there will be an increasing appetite for our finance, for the reasons I've outlined, both in home credit and motor finance. And so although Canaccord are basically saying, well, we've risen by 23%, therefore it's a hold, we would still say, and indeed our brokers do and other people who follow us, still say that we're a well-valued stock. The family has shares alongside other shareholders. We're not going to do anything silly so far as the way we run the company. We run it in a very conservative way, both in terms of our treasury position and in terms of our operations. And we therefore think that the stock is fairly valued.
Just to take a quick look at the two parts of your business, the home leasing part first of all. And I think you do this through loans at home for you.
Loans at home for you is the home credit side.
Right. And it's an older part of your business as well. Is it a bigger part of your business?
Well, in terms of turnover and in terms of profitability, it still is easily the largest part of our business. It takes about 2/3 of our profits against a third from the motor finance side. It is less fast growing than the other parts of the business, although it is growing. And that's good in a sense, because responsible lending means that you don't grow an individual person's book with you too fast, because you want to make sure they can happily repay the instalments. So far as the motor finance business is concerned, that was started in 1999. It is a phenomenally successful business.
You've had record applications last year, haven't you?
Record applications. We get about 15,000 applications a month, of which we write between 350 and 400. So we can be very, very selective. People sometimes turn us down, but in the main, we can be selective in terms of the kind of customers that we attract. They have very sophisticated underwriting systems, very good collection systems, and we have about 5,000 very happy customers.
What is your niche market? I mean, if you're going to turn out that many loans or turn down that many loans, you can't be going for those that are finding loans difficult elsewhere.
We don't. No. I mean, we open the door to people, but responsible lending, and we have very close links with the OFT. In fact, the Director of Licensing from the OFT actually attended our group conference last year. But responsible lending means that you only lend to people on the basis of what they can afford and what they can be seen to afford. So in terms of the motor finance business, that means very, very sophisticated underwriting. They have a scoring system which they developed with Experian, but which is also bespoke so far as our business is concerned. And in the home credit business, we see the customers, we know what their incomes are, we get that verified, we find out what their other liabilities are, and we see them week to week. So we can be pretty close to them and therefore make sure that they can repay the kind of instalments that we make.
It's interesting, despite the fact you're growing, clearly we're on extraordinary economic times, there's a lot of retrenchment. I think you're retrenching to some degree, aren't you, because your gearing has come down quite a long way.
I mean, I always say that any good motor or home credit business, if it's not growing exponentially, will generate cash. I mean, that's the essence of a good business. It throws off cash if you're profitable. And that's been happening with our business. I mean, we are a family business to the extent that the family owns about 60% of the shares, although we're publicly traded. And we want to ensure that we're here in another 75 years' time, as well as the 75 years, almost 75 years that we've been in business. So in order to do that, we make sure that we put money in the bank and that our gearing, for instance, which was about 74% 2 years ago, is now to around about 42%, 43%, and long may that continue.
I was going to say, what are you happy with in terms of gearing? What sort of percentage?
We don't have any particular level in mind. I mean, so long as obviously we're well covered so far as our covenants are concerned, which we are, we like to see gearing drop, because obviously it does mean that you're actually generating cash and therefore you're profitable. That doesn't mean to say that if good opportunities come along, either organic or by acquisition, we wouldn't be happy to increase our gearing, hopefully on a temporary basis, because you're going to be building the business and therefore generating cash. And if those kind of acquisition or organic growth opportunities come along, then we're prepared to increase our gearing.
One last question, bad debts. What's that looking like? Has it grown in the last year or so?
In both businesses, it is remarkably under control. We're at or very close to our budgeted figures. I mean, obviously, in any downturn, the life events that actually cause bad debts, losing your job, partnerships, split-ups, actually increase, and there have been some increase as a result of that. But it is well under control. It is well within budget, and we're very happy with it.
Okay, Anthony Coombs, thanks for joining us. Chairman there of S U Plc.
This film is for educational and leisure purposes only. Proactive Investors does not provide investment advice. The company is a publisher and is not registered with or authorized by the Financial Services Authority. Please refer to the full terms and conditions on the Proactive Investors website.